The Office for National Statistics has, in the last hour, released the latest GDP figures showing the UK economy has grown 0.8% between January and March 2022.
Yes, the big question is, though, what does that actually mean? What does it mean for you? Thankfully, economics commentator Laurie Laird is here. Morning to you. Look,
putting a little pressure on me.
there's a lot of pressure on you, Laurie, because these figures are so to most of us, these figures don't make any sense at all. So what does this mean in real terms?
Okay, no, really, big pressure. Let's forget that 0.8%. It's a little bit less than people were expecting, but we're in a whole new world here. After Russia invaded Ukraine, prices are rising. Consumer sentiment is down. I mean, do you feel comfortable about spending money? When you read these headlines, you think, my gosh, what's coming down the road? So this is, to a certain extent, old news. But let's look at, for the first quarter, let's just look at the month of March, because the Office for National Statistics breaks down things monthly. One of the few statistical offices to do that. The economy actually contracted in the month of March, fell by 0.1%. And it does sound onerous. And what that means is that people essentially are getting poorer. It means that we are producing and buying less in the month of March. A couple of aberrations in March. One of the problems in March was the contraction of test and yeah, there we go.
Right.
Thank you. We're not vaccinating as heavily as we were. So the service sector, particularly health, contracted. Without that, the economy would have grown a little bit in March. What comes in April, though, because that's when we started to get scared. That's when we're reading these headlines. What comes in April is a really big question.
Right.
OK, so
did that help?
Well, it sort of helps, but it's just I'm still feeling quite concerned. You know what I mean?
correct,
Well, you're right to be.
Yeah, I mean, look, we were talking about growth of, 1.3% up until sort of Christmas time.
Which is
so we were bouncing
fairly,
back out of the pandemic.
That's
pretty well, fastest growth in the G7.
Yeah, let's not get too... I mean, because Boris Johnson, Rishi Sunak said that. Different ways of measuring things. That was a little bit naughty, that one.
OK, but, I mean, that's not the case anymore now. We're at the bottom of the G7 in terms of growth. But, you know, we are where we are. The question is, as you say, what happens after April? And forecasting notoriously difficult. But the problems that we're all facing don't look to be going anywhere anytime soon. So could we, and this is the million-dollar question, be going towards the dreaded recession?
Yes. We may not have a technical recession, and the definition is 2 consecutive quarters of contraction. But the Bank of England itself has said we're going to alternate between a little bit of contraction, a little bit of slow growth, and by the end of next year, we're not going to be any further ahead than where we were. Yet, the Bank of England is also saying inflation is so high, we're going to continue to raise interest rates. So we're in this low growth period, maybe even the dreaded R word, but because inflation is so high, interest rates are going to rise. So anyone who has debt, and that's most of us, or maybe I should just speak for myself here, anyone who has debt is going to have to pay more to service it.
Including the government.
Well, correct, absolutely.
But in terms of that, then, I know I've had people on the show say, well, why are the interest rates going up? Why? Because that's taking more money out of our pocket. Explain to us why an increased interest rate is actually very important in reducing inflation.
I'm going to try that, but this is even more of a challenge. This is conventional thinking that typically when you have inflation, it's because an economy is sort of roaring away and people have a lot of money. There's a fixed amount of money chasing a fixed amount of goods that brings the price of goods up and services, you know, things like haircuts and manicures, things like that. This isn't the case with this particular period of high inflation. This is pretty much from energy prices.
Right.
And it's a supply thing. There's not as much energy coming in. The price is going up. So raising interest rates doesn't do anything to combat that. And the Bank of England has said this. By raising interest rates, we are not going to reduce the price of food and energy. What they are saying is what we're trying to do is prevent people like us who are earning less because of inflation going to our employers and saying, look, inflation's cutting my pay. I'd like a pay rise, please. Would you ever mind? And that bids up inflation. So that gets you into a cycle of inflation. So the Bank of England is trying to prevent us from doing that.
Why does an increase in interest rates stop us from doing that?
It's trying to influence expectations. So if we think the Bank of England is going to raise interest rates, that means we think that the inflation will come down, so we don't have to ask for that interest rate hike or that pay hike. And in fact, Andrew Bailey, the governor of the Bank of England, not that long ago, did an interview. I think it was with
someone
one
else.
of your competitors, I'm terribly sorry, one of the financial news channels, and he was asked, should people not ask for pay rises? And this man, who's on more than $500,000 a year, said, well, that would be a good thing, as if not asking for pay rises would be something we do in the national interest.
Yeah, but look, just on that, one of the papers, I can't remember this morning, but we talked about it in one of the paper reviews, is that some employers are suggesting bonuses as a way of getting round the avoiding, trying to keep wages in line with inflation. Do you think that's a sensible option for
I think it's a very good point. I'm glad you made it. I think that will be the sort of things that companies do, where maybe we'll see signing on bonuses in industries where jobs are hard to
Any
fill.
downsides to that, though? I mean, I automatically think that bonus is bad for things like mortgages because it's harder to convince lenders that you've got a particular salary.
To a certain extent, it keeps those pay rises, it limits them rather than stretching them out over the period of a year. But the other thing that's coming up, there's a little bit of reporting this morning that Rishi Sunak and Boris Johnson have finally sat down and said, we have to do something. So Sunak is planning a package, but not until August. And again, this looks like it's going to be this fiddling around at the edges, maybe some more help with energy bills, but tricky things rather than giving money to people who actually need it.
Yeah, OK. Laurie, we're out of time.
Yeah.
I could talk to you all morning
too,
because it's
so
so...
interesting.
You make it understandable.
Well, you put me under pressure there.
I
I was a
know.
little bit nervous.
Don't be nervous. It's only me. Don't be nervous about
We're not
me.
economists, you see. We need you to translate all of this
We
for us.
certainly
We appreciate
do.
it.
Always
Thank
a
you
pleasure.
so much.